Welcome everybody to the Chinchilla Pickin' Podcast. It is September the 8th, 2024 at 3:15 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only blunder of buttons, Brandon Beaver.
We started the intro to the show, and then I hit the stop button instead of my mute button on accident. So that's what he's referring to here.
Oh, and that's why I was laughing when we started back up
Yeah.
again. All right. So we're having fun. At least we're having fun with our own mistakes. Brandon, I know you're probably going to have a one or two comments about Dallas every week from now until January. So, the first week of January after the first round of playoffs ends. So, if you would like to get one out.
Dak Prescott, deal is signed as of yesterday, north of $1 billion, highest paid player in the NFL ever.
Wow. Is that over how many years?
You know what? I got pissed off. Okay, I'm sorry. I'll edit that. I got angry when I read the first paragraph and I didn't get through it. So I have no clue. I think it's 10.
So 100 million a year.
Yeah.
It's quite a lot of money.
Yeah.
Better win some games.
It is stupid money for him.
Better win some games.
Yeah.
I mean, he's still behind Ronaldo.
North
So,
of $1 billion for somebody who's barely north of mediocre.
right. At least Ronaldo will make your team win.
Yeah. He'd be a better quarterback, probably.
Be a good field goal kicker. I'll tell you that.
He used to mediocrity in Dallas.
Yeah.
And then you know what's going to happen? They're going to win some games the next 2 months. My hopes are going to go up, and then they're going to fail in the playoffs again.
Hey, I'm just hoping for a winning season this year, and I think my team has an opportunity to do it. So, very excited about that.
NFL, Chargers.
No,
What
college
are you,
football.
college? Was it like the Corn Huskers or something?
Yes, Nebraska Cornhuskers, man. So as you if you're a listener on the show, I've lived everywhere in the world, not literally, but like lots of places all over the world. But I did high school out of all places, Omaha, Nebraska,
Mm-hmm.
in the mid 90s.
You still have
And
family there too, don't you?
I do still have family there. So in the mid 90s, there was a team that went undefeated for 2.5 years and never lost a game. And so I was like, oh, well, this is my new favorite team.
Okay. So both of our sports fandom peaked in the 90s. At least we have that in common.
There you go, right? But there you go. That's this long but short story. All right. So you didn't come on to hear about football. You came on to hear about stock and investment news. Not a big bunch of fluff really in the market. Besides, before we get into the show, when I go over the rules, I want to say, Brandon, I said September is always down, always, and it's historically higher percentage of being historically true than any other stat for any other month. And guess what? September is starting off down. It's just a month where people sell off. It's cyclical, I believe. It is a sell-off before the holidays. It's a month of rebalancing. You pull out where you're overweight. Every year, if you look at the chart, September is always a sell-off. It's the September sell-off. I don't know how else to say it, but ever since I sold my Novo Nordisk and I've been sitting in cash, I'm watching this because I'm like, this is great. I'm gonna scoop something up very cheap here in the next 2 weeks, and I'm gonna be very happy.
Yeah. Well, the thing is you got the September, sell off that is constant throughout history of the stock market. But we also had the jobs report that came in Friday that left a lot of people confused. A lot
But
of
we're
people
gonna get to that. We're gonna cover that in the show.
A lot of people were, I'll be brief here then. A lot of people were hoping for 50 basis points. Probably not going to get it. Unemployment ticking up a little bit higher. Um, average hours week, or wow, average hours worked per week ticked up a little bit too. Here's what I was confused about this report myself. They said average hours worked per week, 34.3 hours. And that was higher. Where are the 34.3 hour a week jobs that pay enough to support families and pay mortgages, Dave? I want to know.
Well, the average earner in the United States is still at, what is it, $50,000 a year?
Okay.
That's the average earner. So most households have two earners in the household. The average household income is 70, isn't it?
Okay. That makes sense then. That makes sense. So a lot of people are not working as much as I am.
Correct.
Okay.
Yes. Yes, you work 70 hours.
Oh no, here we go again. You're frozen. What is happening?
Get to the other side
I
here.
heard nothing, Dave. You froze up.
At what point did I freeze up?
You froze up when you said most people don't work as much as I work like
Oh,
70 hours and you
yeah.
froze up.
Gotcha. Most people don't work as much as you, Brandon. But we're going to get into these numbers. We're going to dissect them a little bit more later on the show when we go over the data a little deeper. So let's get into the rules so we get started, so people can actually hear our thoughts and see where we think it's going and how this is going to reflect. Whether or not you still hold your position, I still hold my position. We'll see here in about 40 minutes, right?
Okay.
All right. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and banter right here on the show for you. So, Brandon, take us away.
All right. So Verizon, by the way, we talked about like about a year ago, we said that the IPO market was going to heat back up. It has heated back up a little bit. Not as much as I expected. The deal making market has heated up a little bit too. We're seeing more deals come through now that interest rates are set to come down just a little bit at least. Verizon announced plans to buy fiber optic lines that they sold nearly a decade ago, essentially, is what this deal is. They're buying Frontier Communications for $9.6 billion. This is an all cash deal, which is what I usually like. It's $38.50 a share for Frontier investors. The total valuation of this is $20 billion, including acquired debt. The advantages here for Verizon is that Frontier's network is over 2 million fiber optic connections across 25 states. Fiber optics is a big deal. A lot of fast internet from fiber optics. I like fiber optics internet. A lot of people, if you use fiber optics, you'd love it, right? The deal is a lot of people working from home still to this day, given Verizon a big boost to their network. They're going to become number one in mobility, number three in broadband. So making them a bigger player than what they already are. This will give them increased fiber line coverage to 30 million locations by 2026. 10 million fiber optic customers in the Northeast, Midwest, California, Texas, and Florida. And then they're going to be able to overhaul aging phone lines and build new fiber connections. Those are the benefits to Verizon. The big downside here, and why I say, even though from a strategic standpoint, business wise, as far as going after AT&T and T-Mobile and stuff, it would make sense if they didn't already have a debt of $125.3 billion. Go ahead, Dave.
They're doing this because they're losing market share to T-Mobile.
Yes.
T-Mobile with 5G has a bigger, broader network than Verizon and AT&T. That's a fact. When 5G rolled out, T-Mobile was number one.
Yeah, and it's crazy because most of this debt that Verizon has built that up trying to build out their 5G network, but they still lagged.
Yeah, and so they're catching up, and they're going to catch up because Verizon was profitable for years, so they're able to get the loans, they're able to get it, the money in to expand their infrastructure, which is what we typically call good debt, as long as you can afford the payments and interest, because you're expanding your business. But it's at what cost? Because T-Mobile moved into the home internet very quickly, and quickly just jumped ahead of everybody else on that. Verizon also moved in around the same time, but T-Mobile had a better marketing plan, and they got more customers at home.
Yeah.
And the Verizon customers didn't want to do the at-home internet, but T-Mobile customers were. And so T-Mobile's growing in that area as well. So Verizon right now, for the first time in probably a decade, they're playing catch up.
Yes.
And they're playing catch up to someone that they had looked down upon for years, for a decade now. They looked down upon, and now they have to spend all this money to catch back up. And I think they will, but can they afford to go in so much debt for all this?
Well, and then here's the funny thing: you mentioned T-Mobile. They actually mentioned this as when they announced the deal. They said that they're trying to prevent more customer defections to the competitors AT&T and T-Mobile. And they said that also they mentioned cable TV providers that are offering low price cellular services to their customers. So clearly they're having customer defections as well as already being behind in market share. So
Yeah, and also something to keep in mind from a strictly fundamental standpoint when you look at the finances of T-Mobile versus Verizon. Verizon's also has a union workforce and T-Mobile doesn't.
yeah,
And so that makes a difference when it comes to renegotiations every so many years on contracts and how strong they can be going forward. Now, UPS does well with this, but other companies don't do well with it. So it's a give and take there, and we have to see what happens on their next renegotiation with their workers, because if they're losing business and they're going in debt in order to keep the business alive, that renegotiation is not going to be good for Verizon next time
yeah,
around.
yeah. And they had been making some progress on their debt prior to this deal. So as of the first quarter of 2024, Verizon's total unsecured debt stood at 128.4 billion. It was a slight decrease from the previous quarter and 3.6 billion dollars lower compared to the same period the year before. By the second quarter of this year, the figure had decreased further to 125.3 billion. Of course, a $3.1 billion reduction from the quarter prior. So they were making some progress here, but now we're announcing a, $20 billion deal that's going to add back to the debt, which is why a lot of shareholders are not happy. I was very surprised to see, I don't think this went to a shareholder vote for Verizon.
No, I
So
didn't see that either. I read two articles on it, on the deal itself, and that was all I had on it. I did not see shareholder vote on it.
the board of directors voted for it and approved it, obviously. Frontier shareholders still have to approve it. They're going to. Um, they got to be happy about this. It was like a 23% increase from the stock price of where it was before the deal was announced. Um, Frontier also just came out of bankruptcy not that long ago. So quite the turnaround for them. They came out of bankruptcy much leaner, and then being valued by $20 billion by Verizon. I can't see why Frontier shareholders wouldn't pass this. That's going to be easy, yes.
So, if you come Monday, are you buying Frontier?
No. So the deal is going to close in 18 months.
That's a long time to wait.
It is a long time to
That's a
wait,
very long
and
time.
we probably got at least two market corrections be again, other than what we're seeing now, probably two more market corrections, I would say, between now and then. I think you're gonna get another shot at this. We get about a 6.5, 7% premium. $38.50 is where Verizon's buying this company. So per share, right? And that's about a 6.5, 7% from where the stock price is right now.
Yeah, I just pulled up the
Yeah.
stock as of right now. It ended after hours on Friday at 35.73.
Yeah, you're gonna have some it's probably gonna be pretty flat over the course of the next 18 months, but you're gonna have, I think, another shot at 6.5 to 7% when we come closer to deal time, maybe 3 to 6 months out. You'll get that shot again, and then it'll make more sense. Right now, 18 months out, I think you can wait for better deals elsewhere.
It's like almost waiting on that one Microsoft deal you and I both invested in, and we sat there holding forever.
Well, that was because of lawsuits that
Activision.
happened. Hey,
Yeah.
I made money on it. I
I,
think
I made money too. We both did. It's just I
yeah,
made so little and I held it for so long that it frustrated me.
yeah, it does. It can be like that, but you have to weigh the risk versus reward. And so on deals where you think it's going to pass, there's we had a different did we have a different was that during
No,
the
it
Trump?
was the same one that we currently have at the
Was
time.
it really? Okay.
Yep.
Well, I didn't see much risk in that.
Yeah.
What the way
Yeah,
the line
there
played out.
wasn't much risk. Deal was eventually going to go through. It's just the timeline stretched out. So, like this one, the deal's eventually probably going to go through. I don't see a reason why they would block
Yeah.
it. It's just a stretch of time. How long do you want to hold, or can you go in
Right.
there and buy it on Monday and sell it on Tuesday? I don't think so. I think it's going to get
Right.
bought up as soon as markets open. At pre-market opens at 6 a.m., it's going to jump up to 38, and you're going to not have the opportunity.
Yeah,
So,
and I mean the rules for risk and reward are even more specific when you're playing mergers and acquisitions, right? So the lower the risk, the lower the reward is going to be because you're not paying a premium for, the possibility of this deal being blocked.
yeah.
This is nothing like US Steel and Nippon Steel right now that the Biden administration stepping in to block, and it's nothing like that. This is an easier pass through.
Don't get me started on that whole thing with U.S. Steel and Nippon. That there's no legitimate reason to block that merger.
I know.
There's none. You can't give me a legitimate legal reason to block that. Besides the fact you just want to keep the name U.S. Steel. That's all you want. That's the only thing you're going after, and it's political, and politics should stay out of these businesses unless they're breaking the law. And this is nothing illegal about that deal. I'm sorry. I'm
Yeah,
very
and,
strong
and
opinion on it.
and we're not going to block. So if we do block this deal, which they're trying to do, unfortunately, that's going to cost a lot of jobs, a lot of closures, and things
Yeah,
like that.
U.S. Steel has said they have to shut down so many plants and fire all these workers if this deal doesn't go through. The only way you're going to keep the jobs is if you let Nippon Steel buy them. I just it blows my mind.
Yep.
It
Yep.
blows my mind. You have a company that has come out publicly and said, we are going to have to lose half the company. I'm just exaggerating here. I don't know the exact numbers. We're going to lose half the company if we don't get bought up. And then the U.S. government's like, no, we're not going to let you get bought up. And give me a break.
Yeah. Yep.
Give me a break. Anyways, Verizon Frontier. Um, yeah, the deal probably will go through eventually. Again, I don't see another reason. I don't see a political reason to stop it. I don't see any reason to stop this. It's just the timeline is way long out there for me, and I'm not gonna play around with it.
Yeah. No, me either. At this time, I will check back in on it in about a year
There you
and
go.
look at it in 6 months, and I'll keep an eye on it. And by the way, if this does drop to like 10% premium on it, then yeah, of course, I'll jump into it.
All right,
It's on
what
my
you got
watch.
next?
Here's another potential financial contagion. Um, another potential thing that may, stand in the way of a soft landing for us. So the Small Business Administration provided $390 billion in COVID disaster loans to nearly 4 million small businesses and nonprofits during the shutdown. Um, it's hard right now, really, to look at this and say that this was a bad thing because it did save a lot of businesses. A lot of businesses did survive because of this. However, to date, the Small Business Administration has referred 860,000 delinquent COVID disaster loans totaling more than $59 billion to the Treasury Department for collection. In comparison, in a typical year, they charge off 650 disaster loans. So quite a bit above the average number that they usually do here.
I would say that's quite a bit.
Yeah,
Yes.
it's quite a bit. I'll give you an example. Ampac USA borrowed $500,000 during the pandemic. They defaulted last year. Ampac has made $425,000 in loan payments. It still owes $262,000 due to a 30% collection fee after defaulting. Many of these companies that have defaulted are complaining that the Treasury, which is the Treasury Department, is who is charging these 30% collection fees. And they're saying that they didn't know that 30% was going to come to them, was not outlined in the loan details to them. They had no clue that they were going to get hit with 30%. A lot of these companies have paid off the debt and then a lot more, but still owe quite a bit because of this collection fee. And they're saying it's not clearly stated in the loan documents. I got one situation with a company that went out of business. The government went and seized their bonds and their savings accounts that they had saved for their daughter's graduation. So they're not playing around, man. The government is the most cutthroat creditor.
So here's the thing: if you don't set up your company correctly, if you don't set it incorporate it, if you're just doing a basic LLC owner partnership type thing, they unfortunately, if you owe money as a company to somebody else, they have the right to come after you personally and take your house and your cars and your personal accounts as well. There's no legal guard there that I'm aware of. Someone please DM me if I'm wrong in stating this, but from what I'm aware of, they have every right to do that.
Legally, they are supposed to notify the borrower of a 30% chargeback to or interest, 30% interest.
Yeah,
Legally, they're supposed to do that. These people are saying they didn't.
gotcha.
I've also got, I also read, I don't have the specific examples here, but I also read where some people who are paying these back in time, they took them out. A lot of them did as 30-year loans. And so a lot of them are paying back on time, but I get a couple of people that are saying, hey, I was looking to sell my business and retire. Now I can't sell it because of this loan. So we all know that small businesses are big business to banks, especially regional banks.
Yeah.
Do you think this spreads? I mean, that's quite a bit. That's, $59
Well,
billion in collections right now because of this, and it seems to be growing.
that's man, that's a danger. Sure. As long as they're making the payments, no. But if we start seeing complete defaults where they're not making any payments whatsoever, then yeah, I mean, if they're just going to shut down the business because they can't afford the payments, and now businesses are collapsing, small businesses, then yeah, that's a huge problem.
This started rearing its ugly head back in April of this year when it started being reported by like the Wall Street Journal and a few other outlets. And the Treasury Department said at that time, we are working on a 60-day review on how we issue these collections. And they said that obviously a lot has to be fixed. We're 4 months, 5 months past that, and nothing has changed. Typical government.
Right? It's going to take a year, and then they'll revise and report. But no, I mean, this is a huge hit. I didn't know this was here. What's your source again?
Wall Street Journal, and then I had a couple others too. I don't have them pulled up right now.
All right. I'm just curious because, like, if they're pulling this information, especially the Wall Street Journal, then there's got to be this has to be like publicly available information that somebody's just missing. It hasn't come across any of mine. Of course, I'm not looking for it, but I could just pull up my Reuters and other subscriptions I have and just type it in and see what comes up. But first time I'm hearing about it, and that's not very good news.
Yeah, if you Google Small Business Administration COVID disaster loan default, it should come up, I would think.
Gotcha. All right.
Yeah, it's pretty rough, and I gotta tell you, 30%, man, dude, that's rough. Like
That's
if a private issuer was to charge 30%, the government would go after them.
that. I mean, eh.
I mean, it's seriously like if that was the fee of 30% on the small business, and it was a private issuer doing that.
On a small business, probably not. But if it was on an individual, like a payday loan place, then yes.
Yeah, they might go to jail even. But the
Yeah.
government's allowed to, that's
Yeah.
they're the worst creditor, I gotta tell you.
Don't owe them money. Don't owe them money.
No. What Ronald Reagan said the scariest words in English are the government saying, I'm here to help.
Well, on that note, let's shift gears here and talk a little bit more about some of the data and numbers coming out of the U.S. government right now. This is a article I found on Reuters. It was by Lucia Mutukani on September 6th. The headline reads, "Unemployment falls suggests orderly U.S. labor market slowdown." So I was reading a number of articles on this. So there was lots to choose from. I didn't have to just pick this one out. There was a lot of other ones. I read them all. So I'm not just pulling all my information from this one article, but I do like this one the best, I believe. I like the summary right there at the top. Non-farm payrolls increased by 142,000 in August. July payrolls revised down to 89 from 114. Unemployment rate actually falls from 4.3 to 4.2. And average hourly earnings rise 0.4%, up 3.8% year over year at this time. Right. So let's go into numbers, and then we're going to talk a little bit about what this means. So right now, they've been revising lower after the fact, after they've been reporting the jobs numbers. Jeffrey Roach, chief economist at LPL Financial, says the labor market's cooling at a measured pace. Businesses are still adding to payrolls, but not as indiscriminately. The Fed will likely cut by 25 basis points and reserve the right to be more aggressive in the last two meetings of the year. That was his opinion. Economists polled by Reuters had forecasted payrolls at 160,000 jobs after reporting 114 in July, but July got revised down. June got revised down again by half. June payrolls were revised down to 61,000 by 118. That is so close to going the other way, negative. The slowdown in employment growth is coming from a step down in hiring. Layoffs remain at historic low levels, so there people are just not hiring. This is just what they're saying. It's everyday attrition. The layoffs are staying low right now, but attrition and companies are just not hiring to backfill those positions after people leave. If you look at a chart of the monthly change in U.S. jobs, and this is after the revisions, it's pretty shocking to see some of these this chart you see back in January. They're at 300,000, and just very quickly, April on, it just goes down and down and down. And it goes back to another number we're going to get into here in a minute. But the initial August payroll counts have been revised higher in 10 of the last 13 years, except for, this year. Goldman Sachs noted that job growth decelerated 42,000 relative to a 6-month average. So Goldman Sachs is saying job growth is going down. Employment gains were led by construction sector. So if you're wondering who's leading it, healthcare, and then government. Those are the three big ones hiring. Warehousing, retail, manufacturing, all dropping jobs. And so it's manufacturing, and mining, transportation, all those things are the ones that are the typically not people who aren't as higher earnings, if you will. So it's going to hurt the lower end of the economic scale here, from my opinion, when I look at these jobs numbers, because education, health services added jobs, construction added jobs, but it pays well. Government, financial activities added jobs. So that's just more detailed into the jobs number, but the Fed has maintained its policy rate cut going with this, but a surge in immigration, which is partly to blame for jump in the unemployment rate from a 5-decade low, means that the economy needs to create between 145,000 and 200,000 jobs per month to keep up with the growth in working age population. So let me repeat that one more time. The surge in immigration, which is partly to blame for the jump in unemployment rate from a 5-decade low of 3.4% in April, now means the economy needs to create between 145,000 jobs and 200,000 jobs per month to keep up with growth rate in working age population. Brandon, thoughts?
Well, it's a shift from what we've seen over the past like 15 years where the service sector jobs were really needing labor big time. They were actually saying, "Hey, we need more immigration right now because we can't fill these slots," even pre-COVID. So it's interesting to see how that's worked, and maybe we'll just have a readjustment somehow in the economy to fill the slots. Maybe the service sector jobs will come back again. I don't know.
Yeah, no, and I agree. This is a shift. There's definitely a huge shift in jobs here, but the fact that the economy's not keeping up with the growth in working age population, that's kind of worrisome to me,
Yeah.
because you want the now we're going into a China situation where there's fewer jobs available than people who want jobs,
Yep.
which is what they have, and that was on top of the real estate fallout from last year. So China had a double whammy, and that's why they're in the trouble they're in. I don't want us to see us in that trouble either.
Yeah, because we're
Yeah,
not there yet, but we're heading in that direction.
yeah. I mean, and a 1% jump in unemployment rate. I'm not concerned about a 4.2 or 4.3% unemployment rate. That's pretty average
It is,
historically.
but everything works in economics. Everything is a comparison, right? It's in
Yeah.
relation to what we've had in the past. And so when we were at 3.6% unemployment, now what are we? 4.3, I think, or 4.1? What was it?
4.2.
Okay. That's a pretty big jump, even
Yeah.
though it's historically low.
Yeah.
And historically, we're still in a better position than what we normally would be. But compared to a year ago, 2 years ago, that's where people's mindsets are going to be, right?
Yep.
So, and that's a pretty big percentage jump from 3.6 to 4.2.
Yeah, and I'm I'm going to quote here again from the article because all these what I'm reading is quotes from the article. But I want to quote again from the article, and this talks is a question or a point you had earlier. Um, the jobless rate has risen for 4 straight months, despite the increase in household employment. More people are working part time because of business slack. The number of people working part time for economic reasons increased by 264,000 people. Fewer people, however, are experiencing long bouts of unemployment. So people are able to pick up these part time jobs, and that way they're staying employed. But it's still more people working part time than what we had before.
Yeah. So it looks like an increase in part-time labor. It looks like a slowdown in full-time hiring, but they're retaining the employees that they have right now, and those employees are just working a little bit more to make
Yep.
up for the fact that they're not hiring. Um, Wages did go up a little bit, which was good news, right? But all
Yep.
of this is kind of mixed for the stock market
Yes.
because the increase in wages and then the increase in working hours on average could mean that we don't see a 50-point basis cut by the Federal Reserve, which is why the market reacted the way that it did and dropped over the week.
Yep. Yeah, and the market was reacting to numbers on Tuesday. Let me go over those numbers. You ready? I
Mhm.
know I'm throwing out a lot of numbers today, but I kind of said we would dig into these a little bit. So, and this is a number we've talked about many times on this show, and it's the available job openings. I pulled this from the U.S. Bureau of Labor Statistics, so that's where I'm pulling this information from. This is free information for anyone who wants to see it. The number of job openings was little change at 7.7 million on the last business day of July. Um, little was changed. Total separations increased to 5.4 million. That's 3.3 million quits. Layoffs and discharges were 1.5 million. And then hires were right about the same. There was the hires changed little uh, at 5.5 million and 3.5% respectively, mostly in food services, 156,000. This is for July again, not for last month. So the previous job numbers we were talking about was last month. This is for July. So it goes into detail. You can read all this, but the number I'm looking at is that top line number to 7.7 million. At the start of this year, Brandon and I were talking, and I was reading this number in January. If you go back to those podcasts, and it was over 10 million available jobs, and now we're at 7.7 million in 1 year. I mean, and we're in September. So the change from January to September is what we're looking at. The change in unemployment rate, the change in number of available jobs, and the change of inflation. Inflation's come down since then. I give the Federal Reserve credit. The inflation has come down finally, but you see the effect.
Yeah. On top of that, you've got a bunch of middle-sized and small-sized businesses that are having to pay back these small business administration loans that are coming due this year. And the result of that is going to be less spending on other things as well and less hiring.
Right. And so here's the thing you can see. Here's some call outs from this report. So this report comes out every month. I want to call this out in July. So this gives you for July. So in October, we'll see August numbers. But in July, establishments with 1 to 9 employees, the quit rates have decreased, while the layoffs and discharge rates increased. So people aren't quitting; they're just being let go. It's just and so that's where you're seeing the difference now. People aren't quitting; they're have being forced to leave, layoffs, what have you. It's an even number. It's just the number within the number, if you will, has been changed. And June was revised lower. Again, June was over 8 million and it got revised back down to 7.9 million. So we may see another revision here of this number next month as well. So it's just bad news on bad news for the overall market from what I can see.
If this is the worst of it, then we're still small landing or soft landing. If this is the worst of it, but I don't know that it is.
Yeah, and that's what the author of the article I was quoting from also says, that if this is all we're looking at, then I still agree with a soft landing scenario. All right, Brayden. So I'm going to make a hard transition here and a quick cut over to my next topic because I want to spend some time there. So I know there's more we could spend talking about this all day long, but let's just move forward, huh?
Sure.
I like that. Uh, I want to talk a little bit about Turkey and what's going on there. I like covering other countries and other areas of the world to help broaden our audience as to kind of like how things are working. I've covered mineral problems in India, in the trucking industry where they were meant to be shipping nickel and they were shipping some other metal. Covered mineral problems in China. We've covered different coal and natural gas issues in Israel and the Israel war and how it's affected Egypt. Right now, we're going to talk about Turkey and
It's not
not the
even
food.
Thanksgiving yet.
I know, right? I knew you were going to go there. I was trying to cut you off to it, but right there you go. Turkey. That's what we're going to talk about, and what's happened there. So Turkey's had a lot of issues over the last few years. So much so that the current president or Erdogan, who has been in power there in Turkey for a number of years now, he went ahead and tried to influx a lot of money into the Turkish economy, and that worked for a very, very short period of time to keep the economy flowing, but it didn't work in the long term. So the article that I'm going to quote from here, again, there's multiple articles on this. You could just Google Turkey's economic problems or growth or inflation or what have you, and you will get all kinds of articles here. But I'm going from the Financial Times. And this one's written by Adam Sanson. He's out of Ankara, and this was on September 2nd because I like the wording and the stats in this article. But anyways, Turkey's economic growth slowed to the weakest pace since the coronavirus 4 years ago, underscoring how interest rates of 50% are heaping pressure on businesses and households. GDP actually increased at a rate of 2.5% in the quarter, even with interest rates at 50%, but it's lower than what they thought at 5.3%. And this is due to the extremely high inflation. The inflation number there is just outrageous. that note that you could start burning money at this point, as far as the Turkish lira. It's anyways, the second quarter GDP showed a significant loss of momentum. Leading indicators suggest that lagged impact of monetary and credit tightening will be more visible in the second half of the year, but they do not point to a hard landing. It's amazing. They don't think they're going to have a hard landing at 50% interest rate. And here, let me go into the actual inflation here. So the inflation picture has begun to improve, with annual consumer price growth coming in at 62% in July after peaking above 85% in 2022. 85% inflation, Brandon. I don't know what I would do if all of a sudden there was 85% inflation in the United
Well,
States.
see, they're saying soft landing, and that goes back to what I said before. In economics, everything is relative to everything else. So they're
Right.
comparing it to where they were before. So things
Yeah.
just suck a little bit worse than what they sucked before. Like, and Aragon, I don't. It sounds like he's straight out of Game of Thrones. Were they fighting the White Walkers or something in the past, and they defeated the White Walkers? And I don't. How's that working out for them?
Do I have no idea. So yeah, this is these numbers are just I just to read them out loud, just my face. I've got to be making a face every time I read this. And it's outrageous because we're over here, we're complaining about 9% inflation and 5.5% interest rate. I don't know what we would do if we had 85% inflation and a 50% interest rate. That would just be wow. That they would say that's payday loan, interest rate. We can't have that. Um Mehmet Simzek, the architect of the new economic program, described Monday's GDP data as a sign that growth has started to stabilize. He says, "We have left behind a difficult period in which we have significantly reduced vulnerabilities." So that's the outlook from the person who came up with this plan, is that this is positive for him. The tougher economic situation poses a conundrum for Erdogan. I don't know. Maybe I'm saying it wrong.
Something,
That's what it
something
is.
like that. I don't know.
Yeah. He often touts Turkey's years of fast economic growth as one of his achievements as he rose to power. However, he also used economic stimulus as measures so I'm not going to go into this last part because it gets political. He used economic stimulus as a way to go ahead and have the economic growth. That's what the article goes in to basically say. I don't want to get into the political comments they make. But yeah, it's because in 2019, you see they went negative in GDP for a number of months. There's a good chart on here. I love this chart. And then they started turning around. In mid 2021, the GDP jumped up, but that's after coronavirus, everybody going back to work, and now it's slowly going back down again. And they think it's getting to a level where they can start go ahead and start making cuts to that interest rate cuts, which at 50%, I would say, yeah, I think but I think you need to get inflation a little more under control than
Yeah, I wouldn't be
62%.
doing rate cuts right now. I would be increasing the rates, get the inflation down. I mean, inflation is much more stubborn than a recession is. We proved that in the past. Paul Volcker proved that
Yeah,
here
the
in the
Volk, yeah,
United States. You've got to
yeah,
conquer the inflation before you can get the rest of the economy under control. It's going to suck. It's going to be politically unfavorable. A lot of people aren't going to like it, but that's the way you got to go about it. The inflation's got to come down before you start cutting interest rates and stimulating the rest of your economy.
right,
Got to
exactly.
rip the band-aid off.
Exactly. So Reuters every week puts out a thing of the number one articles of the week. It's like a top 20 list or something like that. But on September 9th, one of the biggest articles, most read according to Reuters, was a article about Turkey, and it said Turkey faces wave of bankruptcies as part of the economic reckoning. This was on September 9th. This was what was it, like 3 or 4 days after that article came out. This came out. Turkish companies face a wave of bankruptcy in the months ahead on the heels of Ankara's, that's their capital. It's like saying Washington's, more than a year-long drive to slow economic growth and rein in soaring inflation. in Quorum, a central industry city, high prices and borrowing costs and diminishing demand is pushing many companies to shut down factories and apply for court debt protection. And so that's what happens when you get into that situation.
So that's what their bankruptcy filer,
Yep.
their Chapter 11 or whatever. Court debt
Yeah,
protection.
exactly. So this is what's happening in their economy. We could see it happen a lot faster because everything moved faster in Turkey over the last few years. And you're going to see, if everything holds true to what we know typically happens in an economy, as long as there's no manipulation, you're going to see the Turkish economy go into a deep recession. And it's going to have to sit there if they want to tame inflation.
Wonder what natural materials we get out of Turkey.
I don't
Lithium,
know. That's a
lithium.
good question. That's a good question. Uh,
I think they were sanctioned for a while, but I might be wrong about that.
what? That's a good question.
Let's ask AI.
Yeah, you know what? And I'm doing this now on the show because I feel like this is something that actually could be good. Turkey's main archaeological products include wheat, barley, olives, and tobacco. Uh, Minerals: iron, chromium, aluminum, copper, lead, zinc. Um, it's one of the world's richest countries in terms of minerals, but
Yeah.
chromite is their biggest one. But they are dependent on other countries for energy.
And we do have sanctions on them too, as of January 2021.
All right.
And they were in violation of international sovereignty laws and for illegal arms sales.
Okay.
So
All right.
I was hoping, because sometimes there's a scale effect, right? If you've got a
Yeah.
recession in another a country that you do a lot of dealing and trading with, we're dealing still with inflation here. We're trying to get inflation under control. If we see deflation in these other countries and a lowering of prices to try to spur sales and economic growth, and that could actually help us in return um, conquer inflation. So I was kind of hoping I would see that, yeah, we're a trade partner. We could do some mutual things here that help us both out. But no, it doesn't look like there's going to have much of an effect here in the United States as far as that goes, at least.
Right. But it's an interesting, for me, it's an interesting thing to look at so that I get a better aspect of, okay, the United States, where we're at and what's going on here. And if Turkey currently is going through this and these things they're doing and it's not working, or it is working and it's affecting the economy this way, I know where to put my money in the United States market.
Yeah.
And that's how I'm looking at it. This is a good example for me to learn from so that when I want to invest in the United States, okay, this is what I'm looking at over here.
Yeah. You also have to learn a little bit about the politics and economics of Turkey, too, because they're likely to be vastly different than the United States, especially if you're seeing inflation that high. There's been a lot more intervention by the U.S. or by the Turkish government than what we would even see here in the United States.
Yeah. Yeah. Yes, there has. All right. Moving on to something that I feel is going to take a move next week. And this is, by next week, I mean tomorrow morning. So hopefully we got this podcast up and running for you on your way to work. The headline reads: New iPhone will use ARMS chip technology, if I could talk, for AI. FT reports this. Reuters came out on Friday morning, 4:56 a.m. So it's already been moving. But it goes in to talk about how Apple's latest iPhone, with its A18 chip, it's going to be unveiled at an event on Monday, so tomorrow morning. But it's actually it's been developed by using ARM's newest V9 chip design. This is what a financial newspaper reported on Saturday. Apple is set to host its fall event on September 9th at its headquarters in Cupertino, California, where it will likely unveil a series of new iPhones, updates, and other devices and apps. But they signed a deal with ARM in September of last year, and that extends beyond 2040. And that's a boost for ARM for chip technology. ARM said ARM had said in July that its V9 chips account for 50% of smartphone revenue. So Apple is really keeping ARM alive and making Matsuo-san look very, very smart for investing in ARM.
Mhm.
ARM has taken a hit recently in the stock price. It peaked around 150 or 150 a share. It's down to about 111 a share right now. The news of all this coming out, the news of the details of the deal, I'm sure we're out for some people. I'm just now reading about the deal, but they have apparently Apple and ARM have a history going back when ARM was first founded. Apple was part of getting it going, but then Apple, and this is back in 1990, 93. If you know anything about Apple's history, that's when Apple went down a little bit, but ARM kept going on and became a dominant player in the mobile chip community, mobile phone chip community. And now that Apple came back into prominence, they continued their you know agreements.
Well, Apple's event, I think, is set for tomorrow.
Yes.
And this is going to be announcing the iPhone 16, which is supposed to have all the hardware upgrades for the new artificial intelligence.
Yes.
So we'll see what that brings for ARM, what it brings for Apple. It'll be interesting to me too, because I was literally just before we started this podcast, I was watching a video of Google's Gemini and the Android phones and what all they can do with artificial intelligence already.
Okay.
And Gemini, I'm sorry, the Androids are only have a 1% of global market share of um, mobile devices. 1%. But I kind of kept everything in mind that they were saying that the Gemini and the Android can do, because I'm
Yep.
betting Apple is just going to do what they're doing already, but market it better. And I'm an Apple user. I'm an Apple fan. I'm a big Apple fan, but that's kind of what they do. I don't think we're going to see anything um brand new than what we've already seen already in the markets. I just think that Apple doing it changes the game. They're
Yeah,
better at
and
marketing it.
I agree. I agree. Um, Apple does when Apple makes something and changes something, and it has a big effect on the rest of the market. And yes, it always seems like they don't do anything really extravagant or new, but everybody is looking forward to these chips. And the fact that these chips are based off of ARM's design, um, has a boost to ARM, and I think that's going to be a subsequent boost as long as there's no bad news in the overall market. I think ARM's going to have a nice 3 to 5% jump.
Yep. I think so too. And it'll be interesting to see what Apple does, because Apple usually sells off during their events, but they sold off last week. So I think we're going to see a bump in Apple tomorrow. I think it'll be the
Really?
opposite of what's usually seen. Yeah.
Really? Because I'm staying neutral on that.
No, nobody's buying the news here. Nobody's buying the rumor. They usually buy the rumor, sell the news. We
Yeah.
haven't bought the rumor yet, even on Apple. So,
Hmm. All right. Final thoughts, Brandon. Take us away.
we just had a big sell off last week. I was hoping to catch some good deals. I like Google and Disney where they're at right now, but I'm not super duper excited about it. I already own the two stocks. And I already have a decent amount into them, so I'm not adding yet. I might pick up a couple of shares of Disney, but it's not going to be anything spectacular next week. Um, I it's just looking through. I mean, Archer Daniels, maybe. I was looking at them. They're kind of a good buy right now, but I'm just not super excited about the prices yet. I think the market is still at fair value. So let's see what the next couple of weeks bring. I'm kind of hoping for more of a sell off here, because I've got cash sitting on the sideline, burning a hole in my pocket that I want to buy something, but I'm not going to buy something if it doesn't make sense to me. So
Right. And I'm sitting on cash too. And it's okay to sit on cash if you don't find anything worthwhile.
right, it's like
Um,
car shopping, man. Like I'm not gonna if I'm gonna go out and buy a car. I'm not gonna buy a car that I think is that's all right. I want something to pop out at me.
right. Yeah, exactly. I agree. I agree. All right. Earnings coming up this week. Oracle on Monday. Happy to see what Larry Ellison's company has for us on Monday. This one, not really important to anything. I just always love reading what they say. GameStop on Tuesday.
Oh God.
I love reading that, and I love seeing stock twits explode after that. So it's
Well,
always
see, I'm
fun.
I'm kind of the opposite. I like reading what Larry Ellison has to say because he's a genius.
Yeah.
The
Oh
guy's
no, no,
brilliant.
yeah, 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 yeah. I'm being more facetious with GameStop.
Yeah.
On Thursday, you have Kroger and Restoration Hardware on Thursday. So we get a
Ooh.
shot of the grocery.
We want to hear what Kroger's has to say about their merger with Albertsons. That's what I want to hear because that is very politically unpopular right now. There's a lot of investigation into Kroger's price hikes and stuff like that. A lot of politicians talking about that. So it'd be interesting to hear what they say about that Albertsons merger.
Right, exactly, and that's what I was about to. Yeah, it's same thing. Stole my thunder. I don't mind at all though. Yeah, and Restoration Hardware get a kind of good look at the furniture, a high end luxury furniture area there, and how that is faring. Other than that, I don't have anything I'm really looking at to buy. ARM is the only one I think that's going to go higher. Bitcoin all dropped down a little bit to below 60,000. Again, I reiterate this every single time because people just go on all over social media and they just panic this, panic that, and they can't take short term moves. If you have a long term investment, it doesn't matter about the short term moves. I
Right.
keep saying that. And my view on Bitcoin is long term. I'm not selling anytime soon. And my Bitcoin related stocks, such as I'm only going to mention one, Coney ETF. I'm holding because it's again, I'm long term. I think Bitcoin's going to hit $100,000 within 5 years, and that's just going to raise all ships related to it. So
Yep.
why should I panic sell right now? There's no reason for me to do it in my mind. I'm very confident in those positions. So that's my final thought there.
Okay.
Quit listening to the panickers day after day, or the people are going and say, okay, buy now, and they have their TikTok show.
Hi, everybody. So, my laptop died right at the end of the show, which is why we're having an abrupt ending here. But we got everything out we needed to say, except for, one of my calls last week was Delta Airlines. I was going to have bragging rights, and then Friday happened. So, it was down 1% for the week. Meh, it's just 1 week. But we did call Alta Beauty a buy, and so far we're right on that. It's like one of the only stocks that I saw on my watch list that was green for the week. So some bragging rights for us, at least a little bit. But other than that, we got our final thoughts out. So we hope we were entertaining, educational, and uplifting. Y'all have a good week. Hope Dallas wins today, right? Everybody hopes for that. Everybody. There's nobody in the world that's not a Cowboy fan. People just pretend they're not. Have a good night.